Hello, you're watching Dukascopy TV, and today we're bringing you once again the latest release of the Dukascopy Bank Sentiment Index for January. Joining us this time around is Dr. Stephen Beach from Radford University, USA, to discuss the results of the poll. Professor, thanks for your time. To begin, the prospect of the global economy, as seen by the participants of the January poll, became less optimistic compared to the December's poll results, as the 6-month sentiment index decreased 0.02 to 0.64, while the 3-year outlook stood unchanged at 0.73. Now, even though the emerging markets like Turkey, South Africa, Argentina, and Russia, which are currently confronted with an escalating currency prices, are not covered by the sentiment index, Professor, to what extent the crisis could spread to the developed world, and which countries would be hit first?
It's really been difficult sometimes with the recovery being so slow coming off of the really deep lows in 2009. And we're getting to the point that everyone is trying to answer the question, how do we interpret these really painfully low growth rates even off of that bottom? So these are the stresses that I think we're starting to see as the recovery doesn't seem to be getting really strong legs. It's not really moving along that well. So any part of the planet that has a hiccup right now, including within the emerging markets, it's going to impact the rest of the planet. Any spread of the emerging market problems to the developed world could truly be anticipated, I think, in this environment that we have. I think North America is probably at less risk right now. And we have some things that are going on here that are just great advantages, like the fossil fuel boom that we're seeing here in Canada and northern parts of the United States that are really helping to cushion us a little bit in the Western Hemisphere, or at least in North America, from these problems as opposed to the bulk of Europe or Japan right now. Unfortunately for the EU, I think a big part of the export activity still right now is to Russia and Turkey. And so, some of the weakness in those emerging markets could really impact the EU and even at this juncture, Germany, which has been, kind of the stalwart economy for that part of the world right now. And finally, I think Japan is just a demographic conundrum, you might say. I mean, they're really facing some tough stresses there, and it's probably likely to hit there first and most dramatically hitting Japan. Unfortunately, it looks like Abenomics is not really the long-term solution to the problems that they face over the long haul.
The next part of the sentiment index is the development stages. And according to the poll, the majority of professors expect the Asia-Pacific economy to improve, both in the short and long term. Now, let us focus a bit on China, as it is the biggest emerging economy in the world, and more importantly, the primary purchaser of exports from other emerging markets. The latest Chinese manufacturing PMI data failed to come in line with estimates. And in case China falls into a deeper slowdown, Professor, how would this affect the development of the Asia-Pacific region? And what countries are more prone to resist its repercussions?
Well, that's a really tough question because I do believe that it's going to be tough for particular countries to avoid those stresses. You note that the growth prospects for the Asia-Pacific are estimated to be slightly above the global average. But if we take a look, it's really down quite a bit from the previous survey. And so I believe that the stresses that economists are starting to see with the emerging markets were starting to be reflected in that. The potential emerging market crisis is going to drive this, really. And I think with Japan's economy not gaining traction, we see the pessimism really growing across that region. Chinese PMI really does matter, though, as an overall emerging markets and global barometer right now. A deeper slowdown for China is not going to be good news for any of the trading partners. And actually, it's not going to be good news for anybody on the planet right now. Long term in this region is going to be solid and it's going to be sustainable unless we have some geopolitical stresses. And I think in that regard, we're finding that China is working well along with the rest of the globe and trying to move its economy along in a way that contributes to everybody, doing pretty well. But if we have to look for those that are going to do well in this stressful situation, I think Australia might be in a little bit better position right now to fend off a potential slowdown. But I just don't see any of the developing Asia-Pacific countries be able to really bear a big slowdown on behalf of China and do well in that scenario. Just too much of the region's economy is linked to that engine. So I think the hope is that we'll have, stable global economic scenarios coming forward, some reasonable growth across the globe, and that will keep China from slowing down much more.
And as the last point of the Sentiment Index poll, respondents from the North American region are more confident in the area's both 6-month and 3-year economic development than the foreign poll participants, with the discrepancy in opinions reaching 0.10 and 0.04 respectively. Professor, being from the North American area, why do you believe the outsiders have lower projections for the region?
Well, we may just have a bit of an upward bias here, or maybe just we're more optimistic over here. I'm not sure, but there are some real factors that can contribute to this more optimistic view for the North American economist chiming in here. I think first of all is the oil and gas boom that I mentioned earlier. The savings to the average citizen from this cheaper fuel right now could really hardly be overstated. In addition, the dysfunction that we have in Washington, D.C. Can be seen as a huge discount factor, but in the States, I'm not sure that all of us are quite as concerned and see us as being in that big of a trouble because of those problems in Washington. Also, we're seeing a lot of productivity growth in North America and in the U.S. still, and that really helps to maybe set a better foundation for coming out of this tough economic period here. So when people look at what's going on with the economy, they may see the unemployment numbers, but they may not always interpret within that the productivity growth that we're seeing here in the U.S. right now. While U.S. trade with China is significant, if we take a look at the NAFTA trade, that it really is much larger than that of the U.S. and China, and so that does give us a little bit of insulation from the emerging market concerns that have everybody pretty nervous. And then finally, we may be in a position for some smart immigration reform here in the U.S., and it's one of those things that is long overdue, but that could really deliver some long-term economic benefits for the U.S. and for all of North America if we get our immigration rules streamlined and straightened out somewhat.
And that is the end of today's Sentiment Index. Professor Beach, thanks for talking to us today. And for those watching, more findings of the Dukascopy Bank Sentiment Index are available online by going to Dukascopy.com and clicking on Sentiment Index under the Market Research section. Until next time, goodbye.